All right, we begin, of course, with the markets. Mixed bag over in Asia as they, of course, digested what happened with Fitch. Shanghai Composite Index there up by about 58 basis points, while the Hang Seng, Nikkei, and the Kospi in Hong Kong, Japan, and Korea, respectively, falling. Bitcoin, Ethereum, and Bitcoin looking, or rather European indexes rather, opening bearish this morning, as of course more rate hikes are on the pathway, at least in the UK. So that's why the FTSE 100 is expectedly down this morning. And there, of course, Bitcoin 29,000, Ethereum 1,830. Oil prices, as you take a look at Brent crude, or rather global exchange rates, $1.09 gets you a euro, $1.26 a pound, and the yen still showing some weakness there at 143.72. Oil prices down 78.86 for West Texas Intermediate. Brent crude in the same direction as well. All right, a whole lot to get into here. We have, of course, Efosa Aluyi, who's the head of investments at Sankore Global Investments. Efosa, good morning to you. Thanks for joining us.
Good morning. Thanks for having me.
Lots to get into. China, we're seeing some expansion with the Caixin S&P Global Purchasing Managers Index for Services. Any encouragement for you there with what you're seeing with the numbers from China?
Not significantly, really, because if you look at the official government data on that point, it really was, a contraction, right? However, I think maybe methodology and other things will probably be responsible for the divergence between the number that the government, or the official number that the government has put out, and what the Caixin private sector survey has put out. I think on balance, the recovery in China that we expected in the aftermath of, the removal of those COVID lockdown restrictions has fallen short, So again, what we really look into is to see, significant stimulus in terms of support from the government. A key area that needs to be addressed is the property sector. That sector accounts for about a quarter of China's GDP, and it's had quite a lot of issues. There have been certain moves or certain steps to address the issues there, but they've fallen short. So the government has to pretty much come out all guns blazing to address, the challenges that are inherent within that property sector in China. In the absence of that, really, the recovery will continue to falter.
Thanks for that, Efosa. Let's hop across the pond from Asia to the largest economy in Latin America, Brazil's central bank, turning dovish, flipping things with a 50 basis point cut or so. What do you make of what happened there?
So if you look at what has happened with Brazil, they had been significantly more aggressive in terms of tightening. As a matter of fact, they increased interest rates by about 1,175 basis points in the course of its tightening cycle. In fact, Brazil's tightening cycle was the most aggressive the globe had seen. So essentially, we've also seen inflation come off its, very high points. The last inflation figure was about 3.19%. The target that the central bank has about 3.25. So obviously, on the back of the fact that they basically hit that target, they are starting to basically undo all of that tightening. That's what we're seeing in Brazil. Although we expect inflation to probably pick up later in Brazil, but I think that this move, again, sort of widely unexpected in terms of the magnitude. What the market had expected was a 25 basis points cut. We saw a 50 basis points cut. Maybe the central bank is basically trying to get ahead of the curve. But again, it's important to note that there'd been very aggressive tightening in Brazil, and this is just an unwinding of it since they've basically hit that inflation target.
Thanks for that breakdown. Another central bank in focus today is, of course, the Bank of England, Andrew Bailey. I think a hike is pretty much set. Are we going to get 25 or 50? What do you make of what's happening in the UK?
It's tough to say what exactly we'd get. The last time we expected a 25, they went for a 50. Inflation is still high in the UK. 7.9%. That's the highest in the G7, although it's beginning to soften, but it still remains quite high. So most definitely we'll see a hike today. Whether it be 50, whether it be 25 remains to be seen. You also have to consider the fact that these rate hikes are also having, the impact on the broader economy. The mortgage market in the UK is going to, bear the significant brunt of this, which will hit consumers really hard as well. And of course, which creates, slowdown, in the broader economy. So I think that, in the case of the US, where we're seeing the increasing possibility that the Federal Reserve will be able to engineer a soft landing, still remains to be seen for the BOA and in the UK.
All right, let's see how things turn out there. You mentioned the United States. I've been eager to get your thoughts on this Fitch downgrade. We saw this at the markets yesterday. They fell. JP Morgan, the CEO of JP Morgan, Jamie Dimon, saying it's nonsense, they're irrelevant. What's her name? Janet Yellen, Mohammed El-Arian. Everybody's just. What have you made of what we've seen with the Fitch downgrade?
I think what Fitch has essentially done is to basically sound a warning to the U.S., particularly about, this debt ceiling situation that we always come into every 2-3 years thereabout, the sort of political brinkmanship that it creates. You also have to, note the fact that, debt in the U.S. has just continued to rise. The last ceiling was raised to about $31.5 trillion. That's huge. It continues to rise. And the process through which they arrive at that is always very, very debilitating for markets, so it's not a vote on the strength of the U.S. economy. I think it's a vote, like they said, on governance and a lot of the issues that lead to them expanding, fiscal leverage for the U.S. I mean, some people have suggested that they do it with the debt ceiling because it always creates a lot of problems around when, that ceiling needs to be lifted. So either party has used it for their own political gains, whether rightfully so or not, over the last couple of years, and it has proven to be a problem. I think that's the major sore thumb that has stuck out, and that's what has led to this downgrade by Fitch.
Very interesting. Thanks for that. I'm still in the U.S. Let's talk jobs. I know we're getting the non-farm payrolls tomorrow, but we got the private sector ADP numbers for July, and slowdown from June, but they beat the forecast. Looks like the labor market. What do you make of the U.S. labor market? It seems like it's still strong.
Well, if you look at that report, really, I think it's just a reflection of the trend in the summer. So that report, about 330,000 jobs were created in the leisure and hospitality. And that's a sector that really booms around the summer period. So that's what we're really seeing. If you look at manufacturing, it lost about 36,000 jobs. So the resilience in the labor market, if you look through the numbers, is beginning to sort of come off, which is part of what the Federal Reserve actually wants, that tightness in the labor market sort of softens, inflation continues to drop, and they'll be able to engineer a soft landing. However, you're seeing the strength or the resilience in that labor market causing consumers to really spend more. And that's what we're seeing translating to that, service sector growth in terms of jobs. If you look at, the wages, according to that ADP poll, it went up about 6.9% year on year, which is like, the slowest we've seen since November of 2021. So again, there are signs that we're seeing some sort of thawing in the tightness of that labor market in the U.S.
I want to talk U.S. real estate, still sticking in the United States. The mortgage applications and home refinance applications both falling week on week and year on year. I take it's higher rates. So what do you make of what's happening there?
It's been higher rates, really. I mean, the rate on a 30-year fixed mortgage is slightly above 6%. We've had it higher earlier on in this year. However, I think that even the property market in the U.S. has been quite resilient, right? There is, a short, that inventory issue that has continued to support, prices in the U.S. Housing market. The expectation was that coming into this year where we saw these very aggressive rate hikes and how expensive it's become to really finance your mortgage and all of that demand was going to drop off and that prices were going to come off. But we haven't really seen prices come off significantly because of the inventory, that continues to sit and continues to provide that sort of price buffer, to the housing market in the U.S.
So I still want to stick with housing. What do you make of the Chinese being the top foreign nation that purchases housing? I think it was China, Canada, India. I think we have a top 5 or so. And so, so their volumes dropped, 84,000 bought, but the median price was still high. What do you make of the foreign interest in the U.S. market, at least, sir?
I mean, at the end of the day, this is part of the reason why you had people like Larry Summers, Janet Yellen, and Jimmy Dimon criticizing that, credit rating downgrade. The U.S. is still the strongest economy in the world, so the allure in terms of investments is still very much there. So that's why you're seeing people flock into not just the property market, U.S. treasuries and all of that. So it's something that's still going to stay for quite a while. So the allure is still there, really, and that's what it is. And
that's part of what makes economies boisterous, right? When you've got a healthy real estate market, you've got healthy different sectors and so on.
Absolutely.
Let's see now. Apple, they are reporting Q2 later today, I guess after the bell. We've got some forecasts on what the market is. What are you expecting from Apple? I mean,
just in line with, we looked at Samsung's results, I think, last week, and we saw that revenue decline. It's not going to be an exception for Apple as well. The expectation is that revenues would drop, and that basically is a reflection of the continued drop in demand for global demand for PCs and smartphones. So we're going to see that in Apple's results. However, I think there is going to be a recovery towards the end of the year because that peak of weakening global demand for PCs and smartphones, we're pretty much getting over that peak right now. So what investors, analysts are really looking forward to is the kind of guidance that Apple gives in terms of forward guidance for sales that are going to come up, particularly in September. Also, how that companies doing in terms of sales in India will prove very crucial. China is still a very large market, so again, there will certainly be indications as to how things are going there. So it is expected that the result will be a decline in revenue, but critically, what people are looking forward to seeing or hearing is, the guidance that Apple does give around the sort of recovery that it expects going into the quarter that would end in September.
Efosa, I want to pick your brain on something. We just looked at the top 5 nations purchasing real estate in the US. China is in that top 5. India is in that top 5. Now, you've just talked about your outlook for Apple. You've mentioned China. You've mentioned India. Can Nigeria ever get to a spot? You have to bring us up. Can we ever get to a state where we can be this relevant on the international stage, where big companies like an Apple? Tim Cook went to India to go and open up those two offices there. Now, India is part of Apple's outlook, at least as far as Q2. What do you think?
We certainly do have the potentials to do that, right? We've got the numbers, we've got the natural talent and all of that. Policy just has to be right to enable that. And policy being right has to be consistent over a very long period of time for us to begin to yield those fruits. So it's obviously going to be a lot of work. India didn't get here overnight. There's been a lot of investment in education. There's been a lot of work over decades that we're seeing them beginning to reap this. So we essentially have to replicate those sort of policies over a long period of time, really, for us to really get there.
Yeah. All right, finally, Oxford Economics survey of business leaders. Geopolitical concerns was their number one point of concern, or geopolitical tensions, excuse me, whether it was, what do you make of that? I mean, I guess with everything happening
I think rightfully so, right? A lot of the major risks that we saw coming into this year are essentially beginning to recede. Tighter credit conditions, that's beginning to recede. So geopolitical tensions obviously is coming to the fore. The Russia-Ukraine situation remains there. Relations between the United States and China has not improved. Taiwan remains a flashpoint for that. And if you bring that home to our sub-region, since 2020, we've had about 4 coups in West Africa. So we just had one in Niger. So, these are flashpoints. These are situations that could create significant geopolitical tensions that will then have, very debilitating economic impact. So it's important to keep an eye on these developments. And it makes a lot of sense to say that this has essentially come to the fore as the biggest risk to the global economy, particularly for the rest of the year, really.
We understand, of course, President Tinubu being the chair of ECOWAS. Since we're talking about Niger, we don't want any violence, right? Because that's northern Nigeria, right? Yeah. We definitely don't want violence in Niger.
No.
Peaceful outcome is what we want.
It has to be.
Efosa Aluyi, Head of Investments, Sankore Global Investments. As always, thank you so much for breaking down these global stories. Appreciate your time.
Thanks for having me.